Hey, good morning, everybody, and welcome. It's Saturday. This is Multifamily Unplugged, and I am glad you're here today. Buckle up. I know I talk about that every week, but today I mean it. I have a great guest. I'm really excited about our guest today and the knowledge and information he's going to bring. But before we get there, I've been thinking about three words this morning, and the first one is commitment. Are you committed to what you're doing? The second thing is action. We could be committed and sit there and not take action. But if you are committed to something, you take the action, you're going to gain the results from it, right? It's just kind of that process that'll happen. But the third word that came up for me this week was compounding. The compounding effect of that action that we take. I heard a real estate trainer early on in my real estate career talk about mastering the mundane boredom, that everyday monotony of those things that you do over and over repetitively. But as long as you continue to do those and you master those and capitalize on those, the compounding effect is huge. So whether you're looking for deals and talking to sellers, whether you are underwriting a number of deals to find something that pencils, or whether you are raising capital and talking to people every day, taking action, building on that action every day. The more prospecting you do, the more conversations you have with people, the more follow-up that you're engaged in, the better your chances and results for finding opportunities to buy, raising capital is going to all come together for you. So stay committed and keep taking that action. Hey, if you're new to the show this morning, welcome. Glad that you're here. We're here every Saturday morning. If you're on YouTube, smash the subscribe button and continually listen in. Get content that we're putting out every day that will help you on your multifamily journey, your real estate investing journey. If you're on Facebook, join our community at Multifamily Unplugged and get involved. Put information in there and listen to other people who are chiming in and the content that we put out on a daily basis. Hey, my guest today, I'm excited, Brad Sumrott. Brad is a multifamily coach, trainer, and syndicator from Dallas, Texas. He's been doing this a long time. I want to bring Brad in and see what we can learn from him today. Hey, Brad, how's it going?
Hey, it's going great. Thanks for having me on today.
You bet. Got it right this time. So we're good. Hey, Brad, I know you're from Dallas, and we were talking about this a little before we started the show, but it's pretty hot there today, huh?
Well, the temperature is very hot, very, very hot, triple digits. I don't know how many days in a row. So it's not the best time physically to be in Dallas.
Yeah. I was in Scottsdale a couple of weeks ago playing golf. 8 o'clock in the morning was 108. So I get it. But the other thing that's interesting about being hot is you were just mentioning about a report that came out about lease-ups in the Dallas and Houston market.
Yeah, I mean, look, we've heard about, obviously everybody knows about, the rent increase or the pandemic. And then we've been hearing more recently about those rent increases stopping or even reversing the other direction. But there was a report that just came out about the markets that have the highest leasing activity or absorption. Mm-hmm. And Dallas is number one and Houston is number two. So, Dallas has been and continues to be a great market for apartments. And if you compare that to a place like Austin, Texas, and by the way, Mike, I mean, I've missed out on Austin for 12 years, man. Like every time I've looked at a deal in Austin for the last more than a decade, it's like, oh my God, it's too expensive. But if I had bought it, I would have made so much money. But like now might not be the best time to get into Austin because vacancies are going up, new inventory is coming online. And it's a tough market there right now. And so like what I've always been telling people is like, Houston and Dallas are the two best markets in Texas and probably in the top 5 to 10 in the country, even right now.
Yeah. Well, here's what I know. Dallas has been on the top 10 list of multifamily cities to buy multifamily in, Brad, for as long as I can remember, 15 years at least.
Yeah.
And it's been in the top 10, if not in the top 5 for a number of years. So Dallas has always been a great market. That's for sure. Every time when you were talking about Austin, I had to laugh because every time my underwriter says, hey, there's a deal in Austin, I say, let's not even burn the calories on it. It doesn't make sense. It's just, we know it's going to be too expensive.
Yeah.
So, hey, one question I always like to ask my guests at the beginning of the show, and I always say I'm going to write a book on this, and I'm pretty close to getting that started, but in one word, Brad, what best describes you personally and professionally?
Well, there's two that come to mind, and I'll just give you the first one. It's focus.
Okay.
Focus.
What makes you
What
makes you focused?
Well, I think that, I wasn't always focused. In fact, I spent, ultimately 17 years in corporate America with not a lot of focus because I was trying to find something I was passionate about. And if I had to pick a second word, it would probably be passionate, because once I became passionate about being financially free and achieving, financial independence through real estate, I was able to really hone in and get focused on multifamily. And I've been doing that for 22 years and I haven't deviated. I mean, look, I pivot all the time. I pivot strategies. I pivot business models. I pivot debt. I pivot holding periods. But unlike so many other people, I have absolutely no interest in being a jack of all trades. I don't do commercial real estate, industrial storage, warehouses, office buildings. It's there's always a way to win in multifamily. And I've been able to find that way to win no matter what's happening in the market. So that's given me a lot of focus, and I think it's given me a lot of success.
Yeah. Awesome. I think, Brad, the last few years, things have been really hot. Whether you were a good operator or not a good operator, it didn't make any difference. You had some success over the last few years. You kind of rode that wave up. But what's interesting is a lot of operators have shifted their focus, right? They've gone to industrial, or they've gone to self-storage right now, which, I'm like you. I've always been really focused on multifamily. It's what I know. It's what I'm good at. And why deviate from that, right? And I love what you said about that.
Yeah. Well, look, people deviate because they're just chasing returns. And I get it. I do. I get it. But I don't get it enough to do it myself, because here's the deal. When you go from something that have a high level of competence in, and you move to another asset class where you have less competence, you don't have, you're taking on more risk.
Yeah.
Like people think oh, I'm going to move from multifamily to triple net leasing or to industrial or whatever because the returns are better. Well, the returns are only better. It's I ask myself, what don't I know about this asset class? What don't I see? What are the risks that I'm not even aware of?
Yeah.
Because something might look better on a sheet of paper, but there may be risks that you don't know about. And in multifamily, I feel like I understand. I've been through the 2008 great financial crisis, and now whatever we want to call this shitstorm that we're in with the Fed, right? But it's I understand the risks, and I know how to mitigate them, and I know how to get through them.
Yeah. So Brad, let's talk about that for a minute. So what do you look for so we can all do an underwriting and build a great spreadsheet and look at rent growth and look at exit cap rates and look at all the fundamentals that go into saying, hey, I can produce this return. Well, what do you think that you might miss, or what do you look at maybe when you walk the property or you look at that underwriting? What are you looking for?
Yeah, see, I'll just tell you what I'm looking for is I'm looking for who's in control of the deal. and like I could just tell you right now, there's a lot of operators that had amazing projections and forecasts when they bought the deal 18 months ago, 24 months ago, and none of them are hitting their numbers, including me. And I'll say that. I don't have a problem saying that. But what's going to separate us from other people, yeah, you could say it's operations, you could say it's asset management, but it's also financial strength, it's backing. It's like, what do you do when you don't have enough capital to keep the lights on? And so there's been a lot of syndicators that put together great projections and great spreadsheets, but are very weak financially. And they're in a situation where they are not going to be able to keep their deals funded. And so, like, the number one thing I've always looked for, and I've been doing apartments for 22 years, is if I'm going to be a limited partner, which I still do from time to time, I want to know a lot about the strength of the GP team.
Yeah.
And not just on paper. And if I'm going to be a GP, which is mainly my model in a syndication, I want to make sure that the other GPs also have financial backing, and I'm not the only one.
Right.
And trust me, I get the calls every day from my students of like, hey, we're in a deal, we're GPs, and we've put up money, and the other GPs don't have any money to put in, Brad, and it's not fair. And I'm like, well, I don't want to say I told you so, but it's like, well, why did you get involved with those people in the first place?
Yeah, interesting thing to think about. How much of it has to go with, I want to talk about this floating rate debt deal, right? Where when the markets were so hot, you could go buy a floater at a 2% interest rate today. And then the interest or insurance on those floating rate interest rates got so high, people weren't buying their locks or their caps anymore. And now they blew outside of those caps. And the interest rates are 8, 9, 12% in some cases. They don't have the capital to put in. What's your thought around debt today? Where's the safest place to be with a type of a loan?
Well, look, if I had the exact answer, I would be worth a lot more money than I am right now. And I've done pretty good, but here's the deal. It always seems safer up front to get a fixed rate loan. Like, it always been that way. And so right now, especially when we have in our very distant rear view mirror, we have all the horror stories of people that got variable rate loans with rate caps that expire in 2 years, and now they're coming up and they have to buy another rate cap for $2 million, and it cost them $40,000 2 years ago, and they got to do capital calls. So everybody's operating in a fear mode right now. So just about everybody I know is opting for a fixed rate loan. Okay. The challenge with that is a lot of these fixed rate loans with the agencies have very steep prepayment penalties, especially if the interest rates go down. And so, one of the things you got to do is say, okay, I'm going to lock in a fixed rate loan now, but how much is it going to cost me in 3, 5, or 7 years when I want to exit this deal? Okay. And that's a wild card. We don't know what interest rates are going to be. But if if you get a fixed rate loan right now at 5.5% and rates are at 4%, in 5 years from now, your prepayment penalty is going to be high. It's going to be high. And see, nobody's putting that in their underwriting.
So if you were looking at a deal today that had a fixed rate debt on it, and and I bring this up because we're in the process of closing on a 5-property portfolio, and the blended rate is 3.6% fixed Freddie money for another 8 years. I mean, that's a pretty good opportunity to get into. Wouldn't you agree?
I think it's really good. I think it's really, really good. And, and again, like, what's the chances? The thing is, when you go, that's a really good rate. That's really good. Like, I would take that all day long.
Well, maybe we should talk offline about
I mean, I'm buying a deal right now where we're going to rate lock a Freddie loan with, I don't know, 5.5% or whatever the prevailing rate is. But we want to have a flexible prepayment option, so call it a step down prepayment. We don't want to have like a defeasance or yield maintenance type of prepayment penalty, because that is also really hard to model. And just like, the thing is now, if you get a variable rate loan now, your rate cap is going to be extremely high. But that's based on the last couple of years. But the reality is, it's like most people I talk to believe that rates are going to go down, not up.
Right.
And again, I don't have a crystal ball, but if you just think about it, 2024 is going to be an election year. The Fed just raised rates 25 bips. They may raise rates another 25 bips. And I could be completely wrong, but everybody I talk to that's one or two other multifamily experience and their network, and their number of units and the people they talk to at JP Morgan and Wall Street, everybody thinks the rates are going to go down in 2024.
Yeah.
So, it's really, you got to look at things deal by deal. I still tell my students that we got to look at everything deal by deal and loan by loan, and what could you get? Because, this may not make me very popular, but variable rate loans pay off 87% of the time better than a fixed rate loan. It's just so happened we got caught up in the 13%.
Yeah, right.
The last 18 months.
Yeah.
I am not telling people to go out and run out and get variable rate loans right now. I'm just saying that I know some sophisticated investors that are doing that, and they're looking at it on a case by case basis. And their holding period, their rehab, their loan proceeds, their level of perceived risk, comparing variable rate to what a fixed rate would be, prepayment penalties and all that type of stuff. You got to look at the whole enchilada.
So Brad, I know you and I know some of those same people that are one or two levels above us that have, big portfolios, big networks, deal with some of the JP Morgans and the Goldmans. And the interesting thing is that I'm hearing that 2025 is when rates will start coming down. I actually believe, and I got killed. I got crushed in 2008. And I don't see the comparison between that time and this time because the fundamentals are different. But I do see that that the Feds, I believe, are going to push these rates a couple more 25 clips up, 25 basis points up. And then we're going to see in 2025, we'll see these start to come down. So I think it's a matter of holding tight right now. Are you finding any, are you still underwriting deals and looking at deals? Are you ready to skyrocket your investment portfolio and leave a legacy? Are you tired of inconsistent returns received in the stock market? Do you think that it may be time you take a look at alternative investment options? Passive investing in multifamily real estate could just be that option for you. With no tenants, trash, or toilets to take care of, but providing a solid return on an annual basis that outperforms traditional investing, including monthly and quarterly returns along the way. These lower risk, secure assets are a sure hedge against inflation. If you want to learn more about these types of opportunities, you can email me directly for a 15-minute consultation to see if you qualify. Just email me at mike@mikemorawski.com.
Absolutely. I mean, I just put one under contract, and we're going to do a raise. We're going to do an $8 to $10 million raise on a deal. And there's two others that we may be pulling the trigger on. So look, the key in this business is if every time you step up to the plate, you're looking for a home run. And this is the biggest question I get is, Brad, should I jump in now or should I wait? Are things going to get worse? Like they say, Brad, on one hand, you say things might get worse before they get better. So shouldn't I wait? And it's like, look, the key to winning a baseball game is to getting base hits. It's to put a runner on first base and then advance him to second base and then advance him to third base. And then you have a runner on first and third. And then they hit a double into the outfield and two runners score. But if every time you're at bat, you're looking to get a home run, you're going to end up striking out a lot. And the thing is, people waiting is like one of the most toxic things you could do. So like, I'm getting into good deals now, and I'm going to be getting into good deals later. Yeah. So it's not an either or. It's like, I know how to value deals. I know what properties are worth. I know what I could buy a deal at a discount, and we know what we could do with the property once we own it. So if I could find good, solid deals that are singles or doubles that I can get into right now, then I'm going to do the deal.
Right. I think that just based on what you just said, either the next time you're in Chicago, we'll have to go to a White Sox game, or the next time I'm in Dallas, we'll have to go to a Rangers game.
That sounds great.
Hey, let's talk about raising capital. I think that, I was just telling my assistant this morning, we were having this conversation, and I said, it's been interesting to watch the trends, right? Last year, everybody was talking about underwriting and training and coaching around underwriting. And this year, everybody is running these programs talking about raising capital and how to raise private capital. What are you teaching your students in that space today? And what are you finding with raising capital? Obviously, it's harder for everybody today just based on the market. But, what are you doing different?
Well, if there's anything I'm doing different, and I'd have to ask myself, what am I doing different? And I'll let you know in a week or two when we do our raise for the $8 to $10 million, and how, like, everything I'm hearing is, oh my God, it's so hard right now to raise equity. But it's like, so first of all, like, mindset is your biggest skill set. So if you believe it's going to be hard, it's going to be hard. So like, I'm just telling you right now, I'm going on the record, we're going to raise $8 to $10 million as easily as we've done in the past. So I'm going to start off with that belief. Okay. And why is that? Well, transaction volume is down 90%. I mean, if I have 1,000 potential investors in my database, and, last year I did 9 deals at this time, or 2 years ago, I did 9 deals by this time. And this year it's my first raise. Like, there's a lot of people with money that haven't been solicited, or solicit is a cheesy word, but there's a lot of people with money that haven't been shown a good opportunity. Mm. So like, one thing people need to understand is transaction volume is down 90% from last year. So people still have money to invest. And yes, people might be a little bit more gun shy because of the CNN, the constant negative news that they tune into, and all these the media and all that type of stuff. But the reality is like, if the number of transactions is down 90% and people are 50% less likely to invest, there's still more money out there. Like, just do the math. Okay. So people got to believe, and I believe there's a lot of money sitting on the sidelines waiting for the right opportunity. So with that belief, now you just got to be really confident in your deal, and I think confidence sells, and I think your message matters and the way you communicate matters. So like, now more than ever before, I think you have to be much more confident and much more articulate in your equity raise, whether it's a pitch deck or a webinar or the one-on-one conversations you have. But people need to know that if shit hits the fan, and excuse me, I didn't ask if I could speak like this on your show, but
you could talk worse if you want.
If the going gets tough, people need to know, what the capabilities are of the management team or the leadership team. People want to know their investment is secure. And so I think it matters more than ever on how you communicate. But Mike, really, it got to start with this belief that says, hey, like, look, like, the numbers don't lie. Like, if there's X $100 million out there to invest, and we've done, 100 deals so far last year at this point in time, and we've only done 6 this year. Well, I'm just saying we, meaning like a community, a group, a market, an ecosystem, whatever we is, there's been far less deals. There's far less deals happening than there is, there's far more money available than there is deals happening. So there's a lot of money on the sidelines.
I'm on the phone every day talking to investors, and people are him-hawing around or they say they're going to do it, but they really don't move forward, and you're trying to call capital. But you just said something that was, you actually said 2 things that I think are really important. The first one is articulate. You have to be able to articulate the deal. You have to be able to talk about the math and talk about the sponsorship team and the deal itself, right? So you have to be able to tell that story and tell it with passion and enthusiasm. And the other thing is that I think that you challenge that investor today, and challenge could even be too strong of a word, but I think you challenge that investor today and say, where else are you going to find a deal in today's market that's going to produce a return like this? There's not enough opportunity out there to look at to find this type of a deal. I thought that was really good how you said that.
Yeah. And again, people need to know, let's say half of my potential investors never invested before, but the other half invested in the last 2 years and they're not hitting their numbers, or we're not hitting their numbers.
Right.
So there's a different message to those folks, there's a different message. So you got to know who your audience is, and you got to know who you're talking to. Like, let's say, Mike, you invested with me before and we projected a certain return and we're not hitting it. And now I'm having a conversation with you about another deal. The way I speak to you and the message that I want to deliver to you might be different than the way I would speak to somebody that never invested with me before, if that makes sense.
100%. Yep. And, that about knowing your audience too, you might talk to an investor who needs some tax benefits, right? They made too much money this year, or they're going to make too much money and they need to offset it with depreciation. Or you might have an investor that's just looking for the cash flow and wants that preferred return. You're right about knowing your audience. I think it's important.
Absolutely.
Hey, Brad, I think you have a big event coming up here.
I do. It's our 6th annual Apartment Investor National Conference. And it's at the end of August. It's the 25th, 6th, and 7th. And for some people, the 28th.
Okay. And where's it at? And, I know we're gonna put up a QR code here in a minute and let people grab that QR code. But how do people find out about it? What are you going to do at that event? Give a little bit on the agenda.
Yeah. So the first question you asked is, where is it? So it's in Dallas, downtown Dallas, and it's a 3-day event. And the reason I said for some people a 4-day is because we have a platinum ticket that everybody that has the platinum ticket gets a bonus day 4. So just to clarify on that. And what we do at this event is, it's really about teaching a framework to become a millionaire investor.
Okay.
And so it covers a lot of multifamily, because look, that's my thing. I've been doing, they call me the apartment king, they don't call me the investor king or the commercial real estate generalist king. They call me the apartment king. So it's a lot about apartments, but we still cover other things like mindset. We cover mastery. We cover things like focus. We cover things like commitment. We cover things like passion. We cover things like doing the mundane tasks over and over again, like I heard you say in your introduction. Okay. So, and who's we? Okay. We ain't just me. This is the one event a year where I bring in some of the best speakers in the world, and some really well-known people and some not so well-known people that, there are people out there that are doing more deals than Grant Cardone that nobody knows about. And some of those people will be at my event. Okay.
Any glimpse of who's going to be speaking this year?
Yeah. So Robert Kiyosaki is going to be here in person.
Okay.
And Robert has been on my stage now. This will be the third time in 6 years that he's been at this event. And like, how many people got started in real estate by reading his books? I know I'm one of those people.
Yeah.
So he's going to be there. Now, another guy that's not necessarily a big real estate guy, but he's a millionaire investor and one of the most powerful speakers I ever met in my life. And he's going to be speaking on overcoming adversity, whether it's confidence, mindset. And the guy has no legs and one arm. And his name is Nick Santonastasso. He's one of the best keynote speakers I ever heard in my life. I heard him speak at Tony Robbins' event, and I became his friend. And now he's going to be speaking at our event. And I mean, look, you think you're having a tough day raising capital? Imagine you got no legs and one arm. And how did he become a freaking millionaire?
Yeah.
Right. So if he could overcome adversity, like, look, what we're going through right now with the economy and everything is a temporary situation. And so now more than ever, we need to have these other skills. Tony Robbins says it best, like your psychology is 80% responsible for your success and your subject matter knowledge is only 20%. Think about that. So a lot of people, they focus 80% on subject matter, and look, subject matter is super important. Like, I'm not saying it's not important. We're going to cover all that, but we're going to cover well beyond that. So we're going to have some amazing speakers. Tom Wheelwright will be there, who's the tax guy that's associated with Robert Kiyosaki and writes all the books on tax-free wealth and stuff like that. So if you want to save tax, you should be at the event. If you want to hear from Kiyosaki and where he's at right now with investing in real estate, and he'll even talk about other asset classes, then you want to be at the event. If you want to hear from a millionaire with no legs and one arm, then you got to be at the event.
I love that.
Yeah, it's going to be, and then, again, we're going to have guys from, I'm really good friends and business partners in some domains with the guys at Madeira Residential. They've had their Cardone, but they're not well known on social media. But that doesn't mean like they're buying billions of dollars of assets right now in 2023. So they're going to be talking about like what they're buying, how they're buying it, how they're financing it, how they're raising the money, and what they're not buying.
Yeah.
Okay. So like this event, if there's one event the rest of the year that somebody's going to go to for multifamily, and I know there are other events out there, but this is the one that I think people should dial into the most.
And how many people usually come to your event?
Well, I mean, I do this event once a year. Right. So, I mean, last year we had maybe 800 people at the event. So the networking is pretty good.
It's a good size event, huh?
Yeah, it's a good event to be at.
Sounds like something I should come to.
I think so.
You want to send me a ticket?
Sure, I will send you a ticket.
Thanks. I was going to mention too. Are you a reader? Do you like to read still?
I do.
When we're done, I'll have your staff send me your address, and I'll send you a copy of my book.
Awesome.
Hey, this has been insightful, and I always try to tell people, I say, hey, I try to interview people who are smarter than I am. And I do that because I want to learn something, right? It's kind of almost a selfish thing. And I've learned a couple things from you today, and I appreciate you for that. Thank you.
Well, thank you. Thank you for having me.
Hey, as we start to wind down, first of all, just tell people how they can grab a ticket or get in touch with you.
Yeah, so there's a couple ways, and I know you're going to put a banner or a QR code or something, but you go to my website, bradsumrock.com. There's no C in my last name. If you want to actually interact with somebody on my team, email support@bradsumrock. And then I'm on all the major social media platforms. Again, it's BRADSUMROK, no punctuation, no underscore. There's a lot of fake accounts. So especially on Instagram. I mean, I have some Instagram fake accounts that have like thousands more followers than me. And I'm like, these are fake Sunrock accounts. And how do they have like all these followers? And I'm like, what the hell?
And what do they do with them? You know, it's just.
They send them like bullshit solicitations for like, you know, crypto and Forex and all this stuff that like, you know, I don't know. People message me and say, Brad, have you shifted away from apartments? I'm getting spam from you about like crypto. And I'm like, no, that's not me.
Oh, it's crazy. Yeah, I see that sometimes too. Hey, listen, as we wind down here, I like to ask 3 questions. So what's the best book you've ever read?
Oh my God. I thought you were going to ask me what I'm currently reading right now, but the best book I ever read, it's so hard because I've read so many, but like I could tell you the one that moved the needle for me.
Okay.
So does it make it the best? I don't know.
All right.
But the most impactful actually was richest thing I thought of because, and it wasn't necessarily reading the book, but it was the action I took after reading the book. So I read the book and I learned about, you know, cash flow and assets and ESBI, employee, self-employed business owner, investor. And as a result of reading that book, I took massive action, and that was to go to an event.
Yeah.
Okay. So like, and I know that ties into, you know, my event coming up, but like, look, you could read and get knowledge, but if you, and I heard you, Mike, say this in the beginning about commitment and action.
Yeah.
If you just read a book, but you don't take action, yeah, it could be a great book. And you say, oh my God, it's the best book I ever, you know, read in my life. And I'd say, well, how did that benefit you? Well, it really didn't. I have all this information, but I didn't do anything.
Yeah, right.
So like, you know, take action.
Awesome. How about, you know, and you're like me, you travel around a lot. And so where best tourist attraction that you've ever seen?
Oh my God. Well, I absolutely love Thailand. I went there 5 years ago. I love Thailand. I mean, I know that's a big, you know, it's a whole country.
Yeah.
Geez, I just got back from Africa like a month and a half ago. I had an amazing time.
Cool. Hey, where best restaurant in Dallas? Where should I eat when I come to your event?
Oh my God, but what do you like? Help me out here.
You know what? I'm pretty easy. Tacos and steak.
Well, for steak, Nick and Sam's is really hard to beat for steak. Yeah. I would say Nick and Sam's.
Okay, perfect.
Especially if you like, you know, a good vibe. You know what I mean? Like, you know, it's you know, a high energy vibe, you know, a good crowd, not nightclubish, but it's a good vibe.
Nice.
Yeah.
Awesome. I may have to check that out. You know, you're like the second person that's mentioned that to me. So.
Yeah. You got to give it a try.
Hey, I appreciate you being here this morning. What do you want to leave people with? What, you know, what do you want, you know, if somebody was a new investor listening in to you and I this morning for the first time, what do you want to leave them with?
Well, what I'd like to leave them with is you got to look, the sooner you get started, the sooner you get to the finish line. And it's the number one question I get right now is, Brad, should I start now or should I wait? And, you know, if it's going to take, like it took me 3 years to replace my job income with my investment income. And I didn't say, well, I'm going to wait for a better time to get started.
Yeah.
Because it's still going to take you 3 years. See, people don't understand that. They think, well, I'm going to wait until, well, let's say 2025, and then I'll get started. Well, look, by the time they start lowering interest rates, the pricing is going to be, you know, 18 months ago, people complained that the pricing was too high and there was too much competition. Now the pricing is down 20% and there's virtually no competition if you want to buy deals. So like, get started. That's the number one thing I just want to let people know is if you have a financial goal that involves passive income or investment income, I like to call it investment income, not passive income. Right. But the sooner you get started, the sooner you hit your goals. So get started now, get educated, invest in yourself. And that's what I want to leave with people.
Awesome. Thank you. I appreciate that. Tell people again how they get a hold of you.
BradSumrock.com. Support@BradSumrock.com is the email.
And I just want to encourage everybody to, if you can get to Dallas, or if you're in Dallas, get to Brad's event. I know the information he has shared, and I've been in the business a long time, and Brad is at a high level. And so I know the information and the speakers and the guests that he's going to have at his event will be priceless. So if you are getting started, if you're seasoned in the business, go get a shot in the arm. Learn how to mitigate through this market, and go get what you need. But be at Brad's event this August. Brad, thanks for being here. I look forward to